Welcome back. In this segment, we're going to talk about something that is really critical to all investors, and that's constructing a portfolio not only to deal with long-term investments, but also to deal with the associated volatility that the markets often throw to us. And I think we're going to have some different opinions here. I'm going to turn it over to Jesse first. And Jesse, what are some things that investors need to consider, not only for investing, but just investing in times where the volatility picks up like it is now?
I think the key is, and the first thing you need to focus on is know what you own. You got to know what you own in order to know if you're well positioned.
Right.
A lot of people that we talk to, and they say, my broker does this, or my 401k is that, and I don't really understand it. Take the time and figure out what you own. Educate yourself. It doesn't take much time. Know what you own so that you can know if it's appropriate for your goals.
And what are some of the ways people can go about finding out what they own? Let's say you own a mutual fund and you own Fidelity Magellan. How do you go about finding out, Jesse?
Morningstar.com has free information on mutual funds. Probably the best reference information spot for mutual fund information.
Right.
But it doesn't take much. You can if you have a broker, ask your broker. If you have a 401k, ask your employer.
I would say even just reading the Wall Street Journal periodically will give you enough of an insight as to what's going on in the market that'll get you thinking about, maybe I should look into that investment.
Well, but I guess where I was going with that question to you on the Morningstar, and that is a great place to find it, but also in your quarterly reports that you get from your mutual fund companies, since most people own mutual funds, you can get a breakout of what the top 10 holdings are, so you can get an idea of what the names are, or the bonds, or the municipalities that you may be investing in that you were unaware of. And you can dig down into that a little bit deeper to see what you actually own within that mutual fund.
Well,
and you might find some crossover then. You might have Fidelity Magellan and Vanguard.
Exactly. You might think you're well diversified. You own 5 different funds, but if they all own the S&P 500,
large cap funds,
and a lot of them tend to mimic each other.
You're all going to own the same thing.
Right.
Another thing I was going to say is there's another website, Investopedia.com, which is basically an investor's dictionary. If you don't know the difference between a money market fund and a mutual fund,
it's the Wikiopedia of the investing world.
Investopedia, and you can look up all those different words. And I think one of the other things too that a lot of people overlook is that I don't know if it's the common assumption, but I own some stocks, I own some bonds, and most people own a little bit of real estate, or vast majority of people do. They consider that diversified, and maybe for some people it is diversified, but when you have a market that's been as volatile as it has been, if you're not looking outside those 3 investment categories, if you're not looking at commodities, if you're not looking at currencies or hedge funds, you're really not diversified. All those markets that I mentioned, stocks and bonds and real estate, pretty well correlated. So when things go wrong, everything goes down the tubes. Yeah. And I don't think a lot of people understand that.
That's another part of the second part of what I was going to say is know what you own. Also know why you own it. Right. You have to have a good reason for owning anything in your portfolio. If you don't understand it and don't know why you own it,
if you're closer to retirement, for example, you're going to want to own less
more fixed income,
less stocks and more bonds that pay off income on a regular basis. It's going to be a lower return, but it's going to also reduce your appetite for risk in your overall capital.
Yeah.
So
the types of bonds are very important too.
Exactly. Tax or tax free. You need to get involved with where you are on the portfolio.
Don't own a lot of mortgage bonds these days.
I think when people,
I'd bid for them. I don't know if there's any. There's plenty of sellers, but not at my prices.
Right. It's funny in a town like Bend where everything has been so oriented around real estate over the last few years, and people have really taken a keen interest. They've done their homework. Some people haven't done their homework. If they took that same amount of effort and put it into their 401ks and investment plans, that's the type of thing. Maybe there's something about it that doesn't get people jazzed, but it's really critical.
It is critical. Especially in our main point right now is especially in times of increased volatility. You get these big sell-offs and big ramp-ups, and you get sell-offs in currencies. There's a lot of dramatic moves going on right now. You need to know these things. You need to pay attention.
And if you, let's say, again, going back to your commodities and currencies example, Dave, I mean, if you own just a little bit, not a lot, but if you took 5-10% of your portfolio and took it away from stocks, or maybe took 5 from stocks, 5 from bonds, and put it into a currency fund, or which is diversified, or a commodities fund, which is buying softs, metals, everything, and you're able to withstand these moves because really over the last 6 weeks, for example, commodities have gone up 15-20% kind of across the board versus stocks have only gone up 4 or 5. So yes, stocks have risen, but if you had just taken a little bit out, you'd probably get a little bit more return or a little bit more alpha on your portfolio without taking a greater risk.
We need to take a break, but when we come back, we're going to talk a little bit about how the smart money manages this type of volatility.